Yeah. Hi everyone. So let us continue the discussion of hedge accounting. So in the last two videos, there is part 1, part 2. We have completed the basics of hedge accounting and as well as fair value hedge accounting. Okay. Right. And now the second one, that is cash flow hedge accounting. Let us start and complete in this video. Okay. Right. So what is this cash flow hedge? Yeah, as I already told you, we want to hedge. We wanted to be secured. We wanted to, nullify the risk, okay, arising from the cash flow. Yeah, why? There is uncertainty with respect to the cash flows. Why uncertainty? Yeah, say, market value of something, an equity share may go up and down. I'm expecting something. I'm expecting that I'll get this much of cash flows, but I may not be able to get because of number of reasons, because of the market change, because of the interest rate change. Say example, I have issued a floating rate debenture. Yeah, I have issued floating rate debenture. Yeah, so I said like PLR, primary lending rate plus 1%, 2%, something like that. Okay, right? Suppose today PLR is equal to 10%. Then 10 plus 2, 12% I am supposed to pay. Right? But at later point of time, after 6 months or 1 year, suppose RBI has changed the PLR, increased it to from 10 to 12, they made it, then it will become 12 plus 2, which is going to be 14%. So I'll end up paying more amount of, cash, that is interest. Agree? Right. So I have a risk of like more cash flow, more cash outflows. Could be correct. Now at the same time, I thought of purchasing some goods, which is highly probable forecasted purchases. Yeah, right. So suppose today if I had bought it, today I will get it at this price, let's say 100 rupees, right? And the price, okay, I wanted to purchase after 6 months, then by the time of 6 months, the value of it maybe 100 may become 120. Yes, it depends on number of factors. What could be the factor? Yeah, prices for the commodity can change due to supply demand. Correct. It may be weather conditions. Suppose weather is not good, if it's not raining properly, if there is no crop, obviously there will be less production will lead to higher rate. So it will, I will be having uncertainty with respect to my cash outflows or cash inflows, basically cash flow. We wanted to hedge it. Yeah, we wanted to be secured, right, to some extent with the help of derivatives, right? So if the company has hedged it and if they have designated that it is a cash flow hedge and this is the hedged item and this is the hedging instrument, then how should I account for? That's all we are going to learn now. Okay, right. So cash flow hedge, let's look at this, whatever the matter which is given in my Ind AS Made Easy book, right? Basic information. This is just for understanding the concept. Correct. Obviously I will not be discussing like very high level. This is from examination point of view. This discussion would be more than sufficient, I feel. Okay, right. So cash flow hedge, what is cash flow hedge here? Right. So the risk being hedged is what? The risk being hedged is the exposure of variability in the cash flow. Correct. What are you hedging? Variability. I am hedging the variability in the cash flow, which is attributable to a particular risk. Yes, which is attributable to a particular risk. It can be foreign currency risk. It can be interest rate risk. It can be a fair value of equity share, fair value of the inventory, fair value of something. Correct. Now it can be, what is a particular risk? You have to identify that. Associated with all or a component of. Yeah, it could be related to an asset or liability which is already recognized, or it's a highly probable forecast transaction. Yes. And because of this, what is going to happen? Because of this fluctuation, the variability in the cash flows, a loss, gain or loss is obviously going to hit my profit and loss. Perfect. Done. So what is that? I mean, there are a number of reasons which I already told you. Correct. Now, this cash flow, I mean, variability, volatility in the cash flow may come because of the interest rates, because of the foreign exchange rates, because of the prices, commodity prices, etc. Because of number of reasons. Right. Let's look at some of the examples. Few examples. Right. As I already told you, suppose there is a highly probable sale or highly probable purchase, a transaction of a commodity, some inventory you wanted to purchase it. Correct, na? Right. Then it is very highly probable. Yes, pakka I am going to purchase it. Then there is a risk of increase in the prices. Correct. Now, if it is increase in the prices, if it is a highly probable sale, there is no problem. There is no risk. Correct. If it is a purchase and increase in the prices, that is going to be a risk. That's why we may enter into correct. Now, what can you do? You can enter into a future contract, a future commodity contract. You can enter. Correct. Future foreign currency. I mean, if it is in foreign currency, if you are supposed to purchase, yes, forward contract, you can purchase it. Yeah, anything. At the same time, suppose you have a floating rate debt. Yes, floating rate debt. Yeah, if the PLR rate or LIBOR rate, whatever, something is changed, that is the base, then automatically will end up paying more amount of interest. That is your cash flow. That can be hedged by entering into a swap, interest rate swap agreement. Correct. Yes. So at the same time, a forward contract, obviously with respect to foreign currency receivables or foreign currency payables. Yes, that's, I mean, that is a foreign currency receivable is there. At future date, I am going to get the money. Right. If the dollar rate has come down, it is receivable, then I will receive net. It's going to be, I mean, obviously smaller money instead of the expected money. Correct. Right. So I may enter into a forward contract to hedge the foreign currency receivables or payables. Like that, there will be a number of examples, obviously. Right. This is the basic. Right. Let us now get into accounting, hedge accounting, cash flow hedge account. Yeah. Let's look at the accounting part now. Yeah. Say, yeah, here, first thing. What do we do? I mean, just I'll try to explain it a little bit orally. First, then let us, I will take you through the wordings. Just give me a second. Yeah. See now, what do we do? Right. There is hedged item. There is hedged item. Okay. There is a hedged item and there is hedging instrument. Yes. Hedging instrument. Yes. Now, what do we do? Right. See, with respect to hedging instrument, whatever, I mean, I feel like with the example of something, it's better for you to understand. Yeah, let us say we have a forecast sale, highly probable forecast. Yeah, highly probable forecast purchase. Let me take it. It's okay. Highly probable forecast purchase. Okay. I mean, is it already? I mean, are we? Is it a transaction already took place? No, no, no. It is going to take place. When is it going to take place, sir? It is going to take place after 6 months. Oh, is it? Okay. When what is today? Today, let us say 1/1/2021 is today. That means when is this transaction is going to take place? This is going to be taken place on 30th/6. That is after 6 months. And as you know, that is our balance sheet date, 31st March 2021. This is our balance sheet date or reporting date, which is going to come in. Perfect. Fine. Now, what are we supposed to do, sir? Right. When I say, I mean, since we have a forward, I mean, what is that? We have a forecasted, highly probable forecast transaction of purchase. Correct. We entered into a forward contract. I mean, not forward contract. Let's say a future contract. Yeah. Let's say future contract. Yes. Let us say future contract. Yeah. We said like we'll purchase it for 1 lakh. Purchase it at 1 lakh. That's it. We say we'll purchase the same item at 1 lakh rupees. Okay, done. Right. See, on 31st March today there is no transaction. This is obviously not there in the books. It is not recognized. Correct. Now today on 1st January 2021. Yes, it is not recognized in the books of account because it is a forecast transaction, my dear. It is not. It is going to take place. How can I record it today? Correct. That's all. Even if it is a binding agreement, I will not recognize it because other party also has to do his job. It is like executory contract. What is executory? Both of us have to do the job. Correct. Or both of us, I mean, none of them have done any job. or both of us have done equal job. Correct. He has not sold me, I have not bought. First of all, it is a forecast transaction. Have I entered into an agreement with any party that you should pay me, I should pay you, something like that? Nothing. Correct. Na? That's why obviously it is not recognized. No journal entry in this regard. Correct. Na? On 1st January 2021. Right. Obviously you entered into future contract. Obviously the fair market value of it is going to be 0, because today only you entered into a future contract. Then obviously today value, there will not be anything, that's going to be nil. So no journal entry in that regard on 1st January, that is date of inception, you say. Right. Let us say we reach to 31st March, which is the balance sheet date. Right. Here also, do you record anything? No, I'm not recording, because it is a forecast transaction. As of today, I have not transacted anything for any amount. Then obviously nothing will enter into my books of account. Correct. But since you have a future contract in hand, yeah, because you are a party to the contract, correct, now there can be a gain or there can be a loss. Got it? There can be a gain or there can be a loss. Say example, there is a gain. Yeah, there is a gain. How much is the gain? Let us say that, same items, instead of 1 lakh rupees, it has become 105,000 rupees is the market value of those items which you want to purchase. I repeat, the items which you want to buy, the value of it has become 105. That means, but you have already promised, you already entered into a contract that you will buy for 1 lakh only. Correct. So that means you got a gain of 5,000, because you are getting at a cheaper rate than today market rate. Correct. Na? Right. So I'll say this is a 5,000 rupees is gain. Right. If I do not follow hedge accounting, I would have transferred this 5,000 rupees to profit and loss, because a derivative, a future contract is obviously a derivative. Derivative will be measured at FVTPL, fair value through P&L, and any gain or loss would have been taken to profit and loss. But here, since we are following cash flow hedge accounting, yeah, what the standard says, standard will tell for each point separately, but I am just explaining it just to make you understand, that's all. Okay. Right. What do we do? If 5,000 rupees, this 5,000 rupees, we do not transfer it to P&L, my dear. We do not transfer it to P&L. Say we will transfer it to OCI. Okay, as what, sir? As cash flow hedge reserve. Okay, we'll go in depth. When do you do? What is that? Ineffectiveness, effectiveness, everything will go in depth little later. Okay, just to give a base. Right, that's why I wanted to do this job. Yeah, so the 5,000 rupees, what do you record, sir? Yeah, say some future contract or future asset or something, some asset account debit. Yeah, derivative asset, you write whatever the name you want to write it. Yeah, you got a gain that is equal to 5,000, and we will transfer it to cash flow hedge reserve. That is 5,000. It is obviously part and parcel of equity. Yes, it is part and parcel of equity. Got it? Right. Perfect. Now, sir, now the date has come, that is 30th/6 is our date. Right? Yeah, we'll purchase the transaction obviously. Yeah, today what is the market value of the stock what you want to buy? Let us say that is equal to 108,000 rupees. Correct? You have got a further gain of 3,000 rupees. I'm first handling the future contract. Okay. So then what do you say? Same journal entry, that is future asset or derivative asset account debit, that is going to be 3,000, and CFHR, that is again 3,000. So far your future asset is 8,000 and CFHR is also 8,000. Agree? Right. So on 30th/6, right, aren't we settle it? Yes, the future contract is also meant for 6 months. Correct. So on settlement of it, what will happen? I will get cash because I won the game. This is correct, na? Right. So if future asset cash account debit, yes, that is going to be 8,000 to future asset 8,000. I hope you understood. Yeah, we got the future contract is a separate contract. We realized our money. Correct. But still there is one more account which is there, CFHR. Correct. Since the today market value is how much? 108. Aren't we supposed to purchase the stock at, yeah, because this I am going to purchase from one party. Future contract is, that is in the share market, correct na? That is derivative market mein I am purchasing. That is with different party, this is with different party, correct na? These are not two. This separately you have to settle it, this separately you have to transact it, correct? So now we are buying it, we are now buying the goods. As usual, what do you record? We will record like purchases account debit, because today we purchased it. Yeah, say we paid it in cash directly. Yes, that is going to be 108,000. Now purchases, that is recognized. Yes, it is recognized in the P&L. Yes, it is recognized in the profit and loss. Now I told you there is one more item which is left in my balance sheet. I mean, what is that? CFHR, right? The day when this real purchases or sales or whatever the transaction has been recognized, what are we supposed to do? OCI amount, that is CFHR, should be recycled to profit and loss. What are we supposed to do? Recycle it. Okay, recycle to which one? CFHR. CFHR should be recycled to profit and loss. Okay, sir, how do we do it? Very simple. We'll do like CFHR. It is related to purchases, right? Yes, CFHR account debit to purchases, you record it. Yeah, so that means CFHR is how much? 8,000 was the balance. Yes. So now tell me, what is your net purchases after both the journal entries? What is your net purchases? Yes, net purchase is equal to 108 minus 8, that is equal to 1 lakh. Yes, that is how, correct na? Yeah, so I mean, this is purely meant for the purchases, correct? If I don't link it, that means the hedge relationship, if it is not created, 5,000 would have gone to profit and loss in the last year itself, and 3,000 also would have gone to profit and loss separately. And correct, if I have not prepared the correct, if I have not done this in the profit and loss, how does it look? That is going to purchases will be 108,000. Yeah, that is for the current year. Like there may be a gain of 3,000. There may be gain of 3,000 in the current year, and in the last year there would have been gain of 5,000. But actually these two are not two separate contracts. We have entered into this future contract to reduce, or to secure myself, to hedge my probable future cash outflow, correct? But my intention was that, but if I don't follow this hedge accounting, that cannot be reflected in the profit and loss in the same fashion. If you see this profit and loss, how do you find it? I mean, there is no link between, in your accounting there is no link. Yeah, that's what this is, like I can say accounting mismatch. Yeah, if you are following the hedge accounting, then what is happening? Very simple. What is that? We say purchases are for 1 lakh rupees. That's it. Yeah, in reality my net cost of goods purchase is equal to 1 lakh. Hope you understood. Now let's get into let's read the information what is given in that cash flow hedge accounting. Yeah, cash flow hedge accounting. Okay, cash flow hedge accounting, this is accounting discussion, right? Let's read it out as I have explained it to you. I mean, same matter only. Once you read it, I mean, here we'll be covering every part. Yeah, in my example I have primarily explained just to make you, to give you the basic concept, that's all. Right, now this will give you a better idea without doubt, right? So what do I say? The amount recognized. Yeah, how much amount should be recognized in the cash flow hedge reserve? Cash flow hedge reserve is nothing but equity, as we discussed, correct? It is separately recognized in a separate component of equity. Yes, cash flow hedge reserve amount is going to, that is the name we keep generally. Done. And how much amounts are that could be? That should be a lower of, yeah, lower of what? Lower of the cumulative gain or loss, right? Cumulative gain or loss on the hedging instrument, from the inception. Okay, right? So far whatever is the cumulative gain or loss, you got it. Yeah, suppose say from the hedging instrument has got 100 rupees gain. Yeah, you have got a gain from the hedging instrument 100, agreed? And the cumulative change, yeah, the change will be, obviously if you have got a gain from the hedging instrument, then you must have got the loss from the hedged item, isn't it? Correct, no? Then only you will say there is a relationship and that is effectiveness. Otherwise, how can you actually link it that it is hedging? Correct. So there must be a loss. Yeah, how much is the loss, sir? The change in the fair value. Okay, na? Fair value is nothing but present value. Yeah, you are supposed to consider the present value of it. Right. One of the sums, I'm going to do that, a small, that was asked in one of the examination in GFRS, not in financial reporting paper. Right. That may be useful. I'll be picking that example for discussion. Yeah. So there is a loss. Okay. There is a cumulative change in the fair value, right, of the expected cash flows on the hedged item from the inception. Okay, fine. So what is that? Let us say the loss is equal to 90 rupees only. Yeah, okay. Yeah, try to understand. Loss of the hedged item is 90, but I have got a gain from the hedging instrument 100. But you will be recognizing, you will be transferring. Actually, you gained how much? 100 we gained. But how much will go to cash flow reserve? Cash flow reserve, whichever is lower, that means only 90 will be going to cash flow hedge reserve. Okay, but sir, I have gained in 100. Yes, say example, that is some derivative asset I'll record here. How do you record derivative asset? Yeah, derivative asset account debit. Yes, I gained, I'm going to get 100 rupees for sure when I'm going to settle the derivative instrument. Yeah, derivative asset account debit is 100. But cash flow hedge reserve has to be only 90. Because my loss is actually 90, but your instrument is giving me a gain of 100. That means a balance 10 rupees. In our terminology, we call it as ineffectiveness, and that will be transferred to profit and loss. Got my point? Yeah, that will be the difference amount of 10 rupees will be treated as ineffective, and this will be transferred to profit and loss. If it is ulta, there is no problem. Ulta means what? The gain is actually 90, but there is a loss of 100. Okay, fine, still correct. Now 90% it is effective. Yeah, it is, effective. I don't need to bother. That time what do you record? Derivative asset account debit 90 and to CFHR 90. Correct. But if it is gain from the instrument is more, got it? But what is the loss? Loss has happened is lesser. Correct. Na? Right. The difference amount is treated as ineffective. The same thing is explained in the below paragraph. Have a look at it. Right. What is the next point I would like to say? If the cumulative change from the hedging instrument, yes, hedging instrument is 100, is exceeding the change in the hedged item. Yes, this is 90, that is 100. Yeah, change is 90. Let me say change instead of loss or gain. Obviously, it is loss only. Correct, na? But instead of that, let me use the standard terminology, that is change. Right, change in the hedged item. Yes, correct. This is, we call what? This is called, sometimes it is called as overhedged. Fine, no problem. That is ineffectiveness. Excess amount is ineffectiveness, and that will be recognized in the profit and loss for that excess amount. Excess only I told you. That is what I have done it here. P&L, excess amount is transferred to P&L. Hope you understood. Done. If the cumulative change, okay, na? If the cumulative change in the hedging instrument is less than the change in the hedged item, correct, na? That is what ulta I told you. If the gain is 90 and wherein the loss is equal to 100, there is no problem. Nothing will go to profit and loss. It is effective. Correct. Now, sometimes it is referred as under hedged. Possible. Correct. Now, under hedging is possible. The example, say I am going to get a receivables, foreign currency receivables of $10,000. How much am I going to get foreign currency receivable? 10,000. But I must have purchased a forward contract maybe for $5,000. Correct. Now, maybe I am ready to take the $5,000 to the extent of risk to the risk to the extent of $5,000. Yeah, that is fine. That is up to me. Correct. Now, right. That is acceptable. So under that circumstance, there is no ineffectiveness. Correct. Now, no ineffectiveness will be recognized. Nothing will be transferred to P&L. Entire amount, as I said, derivative asset account debit to CFHR 9090 will be recognized. Hope you have understood this paragraph. Done. The effective hedging portion will be recognized in the OCI. This is cash flow hedge reserve is nothing. It is obviously transferred to OCI. Yeah, any remaining portion shall be recognized in the, that is ineffective portion will be recognized in the profit and loss. Got it? Right. What is effective? Effective means to the extent it is getting offset. Correct? No, that's all. That is what standard says. It is the portion that can be offset the change in the CFHR. Correct? No? That's it. Right. How do you deal with, correct? No? Sir, okay, sir, you will be accumulating it in the CFHR. Excellent, sir. But what do you do? How do you transfer this? I mean, how do you utilize this CFHR? I mean, CFHR will continue till what time? On the date of settlement. Correct. On the date of settlement, what will happen to CFHR? That we are going to discuss now. Right. If you remember, in the just last example, I said it has been transferred to purchases. Correct. Now, that sentence is given by the standard. Let us look into the standard. Right. What does it says? First point, what it says? Yes, your what is that? Accumulated CFHR. Yes, whatever is sitting or whatever is the amount lying in the CFHR account shall be accounted as follows. Then what is the first one? If hedged forecast transaction, it is a probable, I mean highly probable forecast transaction. That is what we have seen in the example. That obviously subsequently means at later point of time it will be resulted into a recognition of non-financial asset. Remember, it is a non-financial asset. It is not a sales or it is not purchases. It is a non-financial asset. What is non-financial asset? It may be PPE, it may be intangible asset, it may be something, correct, investment property. It is not financial asset. Or it may be a non-financial liability. Correct, na? Right. That is, I mean, such fixed asset or inventory something. Or hedged forecast transaction. Yes, it is a forecast transaction. For a non-financial asset, non-financial liability becomes a firm commitment. Yeah, earlier it was forecasted, now it became committed. Yeah, we entered into a binding agreement at later point of time. Correct. Now, for which fair value hedge accounting is applied. Yeah, for firm commitment you want to follow. Correct. Now, I mean, that is generally people don't follow that. I mean, there is one concept. What is that concept? Till it is a forecasted transaction, okay, you can follow cash flow hedge accounting. Once it turns into firm commitment, you can follow fair value hedge accounting. You understood? Right. But instead of this two-step things, yeah, people what, I mean, practice may generally what do they say? Once they designate it as a cash flow hedge accounting, generally they'll continue the same thing till the end. But again, this is a choice to us, right? I can follow cash flow hedge. This line you can forget about it. Okay, na? The entity shall remove that amount from the CFHR. CFHR can be negative, CFHR can be positive. I mean, credit balance or negative, credit balance or debit balance. Obviously, correct. That you should remove it from the CFHR. Remove, I mean opposite. If it has a debit balance, credit it, credit balance, debit it, and include it directly in the initial cost or other carrying amount of such non-financial asset or non-financial liability. Yeah, suppose you are purchasing a fixed asset, right? Suppose, I mean, say you purchase the fixed asset for 65, correct? CFHR has a credit balance of 5 rupees. Then what do? CFHR account debit, so you are removing it. To fixed asset you do it. I mean, you are reducing it from the fixed asset. Hope you understood. Yeah, you are supposed to give an effect opposite. CFHR will be reversed. CFHR may be having credit balance. By debiting, you are reversing it. Correct. And what is the corresponding credits are? Credit should be to that non-financial asset. It may be to the inventory, or it may be to the PPE, or intangible, or investment property, whichever and whatever that non-financial asset or non-financial liability what is that corresponding debit or credit is supposed to be given. That's all is the point. Hope you understood. We'll do one sum on that. Right. This is, I mean, you're transferring it, isn't it? Next point. If the cash flow hedge are other than the above purpose, means, yeah, you have done this job not for the purpose of what? Not for the purpose of non-financial asset or non-financial liability. Yeah, that is what, which is for a forecast transaction, for forecast purchase or forecast sale. Under that circumstance, got my point? Under that circumstance, what are you supposed to do? Transfer the balance of CFHR correct? Transfer the balance of CFHR to what? To the statement of profit and loss. Yeah, transfer the balance of CFHR to the profit and loss. What did we do in the purchase transaction, my dear? Isn't it like correct now? CFHR has been, I mean, your purchases has been reduced by some 8,000 rupees or some number. I mean, in the last example, whatever that, some example may correct now. Same thing exactly. Transfer the balance of CFHR to the statement of profit and loss in the same period or periods during which hedged item is expected to be affecting. Correct now. Whenever is the hedged item is what? Forecast purchase, forecasted sale. Whenever you bring the forecasted purchase or forecasted sale to profit and loss, I repeat, whenever you bring the forecasted purchase or forecasted sale to the profit and loss, that time you bring this CFHR also to profit and loss. That's all we are trying to tell. Correct na? Right. What did you do? First, from 1st January to 31st March, we have accumulated in the OCI, that is a separate component of equity. Correct na? And even the next 3 months also, first we have transferred to CFHR. Right. And on the date when I really made the purchases, correct na, that day is CFHR number, correct na, purchases are made means purchases are transferred to P&L, correct, and that time CFHR number is also transferred to your profit and loss. That is the simple accounting what is explained. Yeah. However, if the amount is loss, entity expects that all or the portion of the loss will not be recovered in the future period. Correct na? Then if you say it is not going to be recovered in the future period, means what should I do? Obviously transfer it to profit and loss. That's it. Correct na? It shall immediately reclassify. Yes. Right. The amount that is not expected to be recovered the amount that is not expected to be recovered into profit and loss as a reclassification adjustment. That's all. That is how this accounting is to be done. Correct? Right. I'll just recall it for 2 minutes. Then we'll look into some small 2 examples. I mean, already I gave an example. I mean, 2-3 examples. Let me try to give it to you. Right. So my dear, first, what is that I said? The fluctuation gain or loss, right? How much should go to CFHR? How much should go to CFHR is not that the entire amount of hedging instrument, gain or loss should go. It's not like that. That's why what do they say? The cumulative gain or loss on the hedging instrument from the date of inception and the cumulative change in the hedged item from the date of inception, whichever is lower, that amount only is supposed to be transferred to CFHR account, right? And if the hedging instrument gain or loss is more than the change in the hedged item, that is treated as ineffective and that portion is supposed to be transferred to profit and loss, right? And if it is ulta, there is nothing is supposed to be done. Yeah, as I said, ineffective portion is always supposed to be transferred to profit and loss, right? Now, yeah, you transferred some amount to CFHR, correct? Is CFHR amount, what do I do with the CFHR amount subsequently? Okay, first, this hedging you have done with respect to a non-financial asset or non-financial, okay na? Right, it is with respect to non-financial asset or non-financial liability, correct? That will be adjusted. CFHR will be adjusted to the carrying amount of such non-financial asset or non-financial liability when it is recognized in the balance sheet. Okay, right, that is what we do it. And second one, if it is not for the purpose of above non-financial asset or non-financial liability, right, then in which period you will transfer that item to the profit and loss? Same period, same time, CFHR also will be reclassified or recycled to profit and loss, right? And if you feel that there are some losses which cannot be recovered and which are not expected to be recovered, correct? Now we are not expecting a gain in the near future, then transfer it to profit and loss. This is the accounting what we have learnt. Hope you understood everything. Okay, right, this is a small one which I have explained it to you, but anyhow, let us have a look at this example given over here. Right, concept capsule 99. Fine. Cash flow hedging forward foreign currency forward foreign currency risk for forecast sale. Yeah, this is sale. What I discussed is purchase, correct now, with a foreign currency forward contract. Yeah, we are trying to do it like that. Yeah, fine. So 1st October 2018, yeah, our functional currency is LC. Forecasted a foreign currency sale, yeah, forecasted, yeah, on 31st March 2000. Yeah, you are on 1st October, we are expecting on 31st March. So obviously 6 months gap is there. The amount of sale is forecasted to be, correct, in our functional currency 3 million. Yeah, not foreign currency, no, sorry, foreign currency 3 million, functional currency is LC, correct, no problem. On 1st October 2018, entity C also enters into a foreign currency forward, correct, which matures on the 31st March, correct, 31st March. Yeah, my balance sheet date is 31st, this is 31st December, year end is 31st December. Done. So at which entity C will receive 4.95 million at the rate of 1.65. Okay, that is the forward rate. Yeah, at the rate of 1.65. So what is that? 3 into 1.65, that is equal to 4.95 million. You are going to get it. Yes, I mean, we will get, I mean, it is a sale. When you sell it, dollars will come to me from the customer. In dollars, I say I will sell it to the banker. Forward contract for sale of the dollars. So I will receive, correct, I will give $3 million. Assume foreign currency is dollar. I will give $3 million to the banker. A banker will give me 4.95 million. I mean, in my functional currency, assume that is rupees. Okay, na? And we pay this foreign currency 3 million will give. That's all. Correct. The fair value of the foreign currency forward is nil on 1st October. That is normal, isn't it? Correct. Next, they have given the information. So spot rate, yeah, at the same time, what is that? This is spot rate and this is with respect to forward rate. Okay, and what is the fair value gain or loss from this? That is all given. Perfect. So I mean, first day obviously there will not be any gain or there will not be any fair value for your forward contract, correct na? Right. So on 31st March, I mean, with respect to day 1, will not record because it is a forecasted sale, it is not sold, right? So no journal entry as per Ind AS 115, correct na? Why do you record? There should be risks and rewards. I mean, actually the control of the goods should be transferred to other party, otherwise you cannot recognize the revenue from contracts with customers, correct na? That's it. So first day fair value of the forward contract in hand also has 0 value, so no journal entry will be recorded. On 1st October, no journal entry is recorded. Got it? Right. Next, what is that here? Yeah, the value has gone to, I mean, what is that? Forward rate has gone to. I don't need to care much about it, my dear. The reason, forward rate, I mean, the gain is, it's already given, correct now, 89,820, which is the cumulative value. That's it. Okay, this is for the 3 months period, this is for the 3 months period, this is for the total period. Got my point? That is for basically the total period. Total period means what? From 1 to 6 months, right? Look at, so we have got a gain. Yeah, gain is in positive, loss is in negative, it is said on the top, correct? So you have got a gain. What do you do? That's it, a forward contract, no? Forward asset account debit to CFHR, that's all, right? So that I'm going to say that what is that? 89,820, that I'm going to do it. Yes, look at derivative asset is 89,000, correct? At the same time, equity, what is that? Equity cash flow hedge reserve is equal to 89,820. We'll recognize. Yeah, subsequent next 6 months also, what is happening? Derivative asset, we are going to recognize this number. Perfect. And sale is going to be recorded on 31st March, correct? So, right, what is that? 4,50,000 cumulative number so far, this is equal to 4,50,000, correct? We'll get the cash account debit to derivative asset. Yes, we realized our money of 4,50,000, right? But CFHR is there, right? Before CFHR, first we should have a sales transaction. That day spot is how much? 1.5, correct na? So cash account debit to sales 45 million or 45 lakh, whatever it is recorded. Then what should I do? CFHR is showing which balance? Credit balance. Now that should be adjusted with sales. So CFHR account debit to sales 4,50,000. We will be doing it. That's all. So my net sales is equal to 45 lakh rupees plus 4,50,000. So totally 49,50,000 is our net sales, total sales. Correct now, because this is to hedge our forecast sales. So our sales money is correct now should be 49,50,000, not like 45 lakh rupees is sales and 4,50,000 rupees is my other income. No, it is not like that. Under hedge accounting, it is because these two transactions are not different. These two are interlinked. Correct now, it should be presented. All this our efforts are to ensure that our sales number should be more, isn't it? That is the point. Hope you understood. Let me take you through another two questions. Yeah, this is our additional question. This question and answer I'll be sharing it below the video, and then as part of description of the video you can find it. If you want, you can download this. Right, this question is actually much better than the question what is given in the text. Yeah, frankly speaking. Yeah, why? In the text whatever we have read, if you observe it, we have not compared the actually what is that cash flow hedge reserve should be the amount which is lower off, isn't it? Which is lower off the cumulative gain or loss from the hedging instrument and the right and the cumulative change of the hedged item. Correct now, that point was not covered over there, but anyhow I'm explaining it that same point under question number 1. Okay, I mean here this is an additional question to you. Fine, right, try to follow this. This is somewhat good question, I can say. Right, a company signs a contract, okay, signing a contract on 1st November to purchase an asset on 1st November 2022, means exactly after 1 year. Yeah, for $6 lakh. Yeah, say our functional currency is equal to rupees. Okay, anyhow they said the company reports in rupees. Yeah, assume that is the functional currency, our presentation currency, both are rupees. Correct, and it hedges the transaction by entering into a forward contract, okay, to not 60, 6 lakh basically. Okay, na, this is 6 lakh. Fine, because here is 6 lakh, na, it cannot be 60 million all of a sudden, right? 6 lakh, and that is on 1st November 2022. Yeah, because we are buying an asset. We are buying an asset means we are supposed to buy dollars, because we are buying the asset in dollars. So on that date we need dollars in hand. Correct, if you need dollars in hand, then you have to go to market and purchase the dollars. So that's why we before I mean instead of going after 1 year, now only we entered into a forward contract to purchase the dollar. We are buyers. Correct, right, the forward rate is this one, 66.67 is the rate. Got it? Done, not a problem. Okay, spot and forward rate changes are given. Yeah, spot rate is this and the forward rate is this. Okay, forward for delivery on 1st November 2022. Yeah, forward, I mean forward rate settlement date is going to be 1st November. Correct, na? Done. So anyhow, we have entered it at 66.67. The rate in the market also 66.67. So obviously we do not record any journal entry for the derivative asset. Correct, a derivative contract basically, no journal entry. Yeah, have you bought the fixed asset? No, I have not bought. Correct, it is a forecasted. Correct, now we signed. Okay, even it is signed also, yes, no problem. But here I'm not going to, it is a, I told you, executory contract. So that's why no journal entry, even if there is a binding agreement in this regard. Yeah, now please focus 100% so that you can catch 100%. Yeah, on 31st March, observe my dear, here we are actually comparing. Oh, this has come, fine, no problem. Presentation, not presentation, I mean what is it, alignment issue, fine, doesn't matter, I understand that. Value of the contract on the balance sheet date. Which contract? This is the forward contract. Okay, na, forward contract. Yeah, how much value has it come? Correct, na, how much value has it come? Yeah, just observe here. Yeah, $6 lakh you wanted to purchase it, correct? Yeah, your agreed rate is what? 66.67. Yeah, our agreed rate is 66.67, or what is the number? That is equal to 4 CR. This is the number, okay na? Yeah, it came down, you understood, correct? But today rate is how much? Today forward rate is how much? For which settlement date is going to be 1st November 2022, correct? What is today rate? 80.65. So $6 lakh into 80.65, that means 4.839 crores. 4.839 crores, correct? I hope you understand. Yeah, today, I mean, if I close it, I will get 83,90,000 rupees profit, correct? Isn't it a gain for me? Yes, it is a gain, 83,90,000 rupees from the hedging instrument, correct? Now, this is forward I wrote, this is hedging instrument. Yeah, from the hedging instrument, I made a gain of 83,90,000. Hope you have understood. Yeah, one part. Let us try to understand what is the loss or gain from the purchase contract. I mean, purchase of machine contract, firm commitment. This is correct, na? Right. So increase in the cost of asset from the inception to the balance sheet date till date. Right. Listen carefully. If you had bought it 6 lakh worth of asset on the day one, you would have paid 6 lakh into 68.97. Agree or not? 6 lakh into 68.97. That comes to, what is that? 4 crore 13 lakh 82,000 you would have paid. Correct na? Which number? 6 lakh into is 68.97. But to today's spot is how much? Spot rate will be different and forward rates will be different. Correct na? Right. 83.33 is the forward rate. Got it? That means what? If I say M plus 6 lakh into 83.33, if I say 499 point, means almost 5 crore. Yeah, if I say minus this number, if I say 86 lakh rupees is the loss from this contract. Correct na? 86 lakh is the, I mean today, because I have not yet bought, isn't it? I have not yet bought. That's why there is a loss. Yes, there is an increase in the cost. Yeah, cost is increased. Cost is increased means what? Obviously loss to me. Yeah, that is equal to 86.16 lakh, right? How did I get? Yes, obviously these two numbers, I mean that initial rate and today rate, if I compare it, this is the increase in the asset, correct? Now listen, what should I do? I should, correct now, I should create, I mean I should transfer it to CFHR, whichever is lower. This is 83 lakh rupees gain and the change is equal to 86 lakh. Obviously lower amount is 83 lakh 90,000. Correct. Gain from the hedging instrument is lower than the loss from the hedged item. So there is no ineffectiveness concept here. That's why entire 83 lakh, this number will go to CFHR. Correct. So what is your journal entry? Yeah, forward asset or derivative asset account debit to CFHR. This entry will be recording for that amount. Hope you followed me and understood. Right, chalo. Now next, that main date has come, that is the date of settlement, that is 1st November has come. Okay na? Right. Now what are we supposed to do? Again, try to calculate what is the value of the contract. Which contract? This is the nothing but forward contract. Today what is the rate, sir? Yeah, today what is the rate? Today rate is equal to 100, correct? But we already recognized from here to here, it's already recognized. So the gain or loss I am saying from 80.65, I am correct na? Gain or loss is 80.65. Yes, from here I am calculating, correct? From 80.65 to 100, correct? This number obviously will come here. There is a gain from the contract of 1.16 crore. How much is this? 1.161 crore is my gain from the contract, right? And at the same time, what is your loss from increase? Correct na? If you had bought on 31st March, you would have got it for 83.33. But today the value has again, dollar value has gone up. That's why your cost of asset has gone up by what number? Obviously 16.67 into 6. Correct. Now difference between 83.33 and 100 is 16.67. That is equal to 16.67 into 6. That comes to 1 crore rupees is 1 crore. Exactly 1 crore will come because of the fraction. Correct. Na? Yeah, that is actually your loss from the contract. Correct. Now, loss from the which contract? Loss. The loss or change in the hedged item. Change in the hedged item is equal to 1 crore. Got it? Right. Whichever is lower, actually this is lower. Yeah, isn't it? It is overhedged, can I say? Correct. It is actually overhedged. What is overhedged? Overheads is equal to 16,10,000 rupees. 16,10,000 rupees should be transferred to P&L as ineffective portion. So, what is the journal entry? Forward asset account debit 1 crore 16 lakh 10,000, credit CFHR 1 crore, correct na? To profit and loss 16 lakh 10,000. That's all. This is the journal entry. We are supposed to record it. Correct? Done. Next, on that date, are you purchasing the asset? Yes, you will buy the asset. When you buy the asset, you are supposed to recognize it at that date, spot. Correct? Na? Yeah, you bought it for asset account debit to cash. That is obviously for 6 lakh. $6 lakh, and that day today spot is equal to 100. Yes, that is as per Ind AS 21. Correct. Now recognize the transaction using the rate on the date of transaction. Right. So we used it, and so far our forward asset has become how much? 2 crore, isn't it? First is 1 crore 16 lakh, and the other one is 83 lakh and not 83 lakh 90,000. It is coming to 2 crore. So won't we settle it? Yeah, we'll get the money. So cash account debit to forward. Cash account debit to forward. We collected 2 crore because it is our money now. Correct. Now still there is CFHR account in the balance sheet. Correct. What is the CFHR amount, sir? CFHR here you transferred 1 crore, and here you transferred, what is that? 83. 1 crore 83 lakh 90,000 is what you transferred. That amount should be reduced from the asset what you have recognized. CFHR is showing credit balance. Correct. Debit it. CFHR account debit 1 crore 83, entire amount. Credit to what? Yeah, this is with respect to non-financial asset. Correct. So adjust it with the non-financial asset. That's it. So CFHR account debit to asset. Got it? Yes, like this we are going to solve the sum. Hope you have followed me. Right. Now let's go to the one more sum which was given in the institute, what is that, November 2020, if I remember. Okay, this is from GFRS paper. Correct. That is paper 6E. Yeah, you know, obviously this is part of group 2. Right, I think this is asked in November 2020 examination. Okay, yeah, that question, it is, I mean, okay, that question, let me explain it. They have asked for, again, obviously cash flow hedge, hedge accounting we are supposed to follow. Okay, yeah, let us read the question. Okay, building and company whatever limited is also engaged in the trading of copper. Okay, they buy sell copper. On 1st April 2019 it had 100 kg of copper. It had, fine, costing 70 per kg. Their cost is 70 per kg, that is equal to 7,000. Fine. The company has scheduled a delivery of these 100 kg copper to a customer on 30th September 2019. So after 9 months they are going to sell it, deliver at the rate of USD 100. Okay, I mean they wanted to sell it, I mean this entire 100 kg of copper for $100. Okay, fine. To protect itself from the decline in the currency, yeah, so customer will give $100. The value of the dollar may come down. Correct, na? Right. So the entity hedges its position by entering into a currency, forward currency future for the equivalent currency unit at 76 per unit, I mean per dollar. So $100 into 76, that means 7,600 they will, I mean because they entered into future contract, 7,600 they are going to sell the dollar at the rate of 76 each at a future date. Correct. So because of the future contract you have, what is that, you fix the price. Agree? Done. The future contract matures on 30th September 2019. Okay, future contract matures on 30th September 2019. Fine, that's the same date. Yeah, basically. The management performed, correct? No? The management performed an assessment of hedge effectiveness and concluded that the hedge relationship qualifies for the cash flow hedge accounting. Yeah, here they said, obviously this is cash flow hedge, correct? The entity determines that. Determines and documents. Yes, documentation, hedge documentation is very important, correct? The changes in the fair value of the future contract will highly effective on offsetting the variability in the cash flow from the cash currency exchange. They are saying this is effective, highly effective, right? That's why you can follow it, that's all. So we don't need to, calculate effective or ineffective. That is not our headache right now. Okay. Yeah, they said it is effective. That's all. We'll blindly follow it. Yeah, on 30th September 2019, the entity closes out its current future. Obviously, dated 30th, correct? Settlement date is 30th September. On the same day, it sells the inventory, they'll sell it. Okay, that day rate is equal to 72. Which one? Spot rate of inventory sale. Correct? Sales are booked at 72. Like in earlier transaction, also same thing, which was there in the in my book. Here there is only one small point is there, that's why I just wanted to take it up. Okay, right? What is that? A small or additional point I can say. Yeah, if you remember, a change in the fair value of the hedge, bracket mean present value, correct na? Right? If they have given the present value, then present value, you are supposed to consider the present value that is supposed to be discounted, right? Which I am going to explain it how we'll do it. Yeah, this is other information. Okay, right? Discounting factor, they are giving, the discounting factor is given 6% per annum. Yeah, quarterly basis means obviously 6 divided by 4. 6 divided by 4 means what? That is nothing but 1.5% per quarter, correct na? Right? So date, first date is the date of contract. Yeah, 30th June, maybe the year end, something like that you can say. Yeah, let us say this is the year end and this is the what is that? Settlement date. Yeah, settlement date is given 72 here, correct na? 72 is the spot. Other spots are not given here, not given. We don't need to check it. Why? Because they said it is effective. So that's all, correct na? If he has given, then I would have calculated what is the gain or loss from the contract, what is the change in the contract, something whichever is lower, like earlier somewhat we did, I would have done. But here, no information. Let's be quiet in the exam. That's all, correct na? Forward rate, yes, forward rates will be changing. Yes, as we know, today we entered at 76. Perfect. Yeah, anyhow, today forward rate is 76. We also entered at 76. There is no change in value. Value is equal to 0. Correct. And what is this? This is what is that? I say quarterly. It's like 1.5% per quarter. Correct. Settlement is happening on 30th September. Right. Today on 1st April means 2 quarters difference, isn't it? Quarter 1, quarter 2 difference is there. So what have you done? 1 divided by 1.0, right? 15. To the power of 2, when you do, this number will come. To the power of 1, if you do, this number will come. To the power of 0, this number will come. Okay, a discounting factor here. Quarterly wise we have given. That's it. Forward rate has come down 74 and 71. Okay, fine. Now, this is a spot rate at which, that's a different case. Right, chalo. Now, what are we supposed to do? The journal account, journal entries and all is not something great. Right. Basic, what is the new point I wanted to explain is, this is the new point. That's it. This is where I will be just focusing little bit, not something great. Observe carefully. Yeah, today 1st April, obviously there is no value, all value is equal to 0. Forget about it. Correct, na? Right. 30th June, what is happening, my dear? We entered for what? We said that we will sell the dollar at 76. Correct. It's a future contract to sell, because I am collecting dollar from the customer. Whatever I collect, I will be selling. We are seller of dollars. Correct. 76 means 76,000 into 100. Correct. 76 into 100, that is equal to 76,000. Got it. right? But the today value, dollar value is equal to how much? I mean, forward is equal to 74. 74 forward rate, but I have a contract to sell at 76. Isn't it 200 rupees is gain? Correct. Actually 7400 is the today rate. Correct. Now today is which day? 30th June. So I have a gain of 200. Correct. And which day you are now? 30th June you are. Correct. So from here to this day settlement, there is a gap of only 1 quarter. Yeah, 1 quarter means our 200 rupees should be discounted with that 0.985 something. The 0.985 is a discounted. 200 into this is going to be 197. 197 is the gain. You should measure it at, I mean, your forward contract as forward asset account, debit or future asset account, debit to CFHR, transfer 197. That's all. Next, September 30th. So when I come to September 30th, it has come down 74 to 71. Correct. So it is 77,600. Yeah, but from here to here, if you take it, that is equal to 500 cumulative gain. What is it? Cumulative gain. But already correct now. Cumulative gain is equal to 500. And today there is no discounting because you already on 30th September, present valuation is equal to 500. So now further gain is how much? Further gain is nothing but the difference between these two. What is the difference between these two? That is nothing but 303. Future asset account debit to CFHR, 303 will be transferred. Okay, CFHR will be transferred for 303. Got it? Now observe the on 1st April as we discussed. Correct? 0. Right. Forward asset, future asset, whatever asset. Okay, na? Right. But basically derivative asset. Correct. Because it's a gain to us. So cash flow hedge reserve 197. Yeah, and again on 30th September, again 303. Correct. Now, so aren't you settling 500 rupees? Aren't you getting 500 rupees from this? Yes. What is that? Cash flow, not this one. Bank account debit to forward 500 rupees is the collection. Correct. At the same time, aren't you selling it at 72 rupees is the rate at which you are going to sell the inventory? Correct. 100 kg at I mean 72 into $100. Correct. No? Yeah, $100 is the correct. No? So totally my sales are going to be, yeah, revenue from the construction, that is India is 115. Today the risks and the control basically has been transferred to the customer. So 7,200 you recorded. Got it? Right. Now look at, there is CFHR which is nothing but 500. This is with respect to sales. No? When sales have been recognized in the profit and loss, then CFHR also should be recycled from OCI to profit and loss. Yes, CFHR account debit to this. Correct. Now revenue. So your total sales is equal to how much? That is equal to 7,200 plus 500. Got it? That is my total 7,700 rupees is my sales. Hope you have understood. Got it? That's all, my dear. That is about the cash flow hedge reserve accounting. Right? If you like the video and if you really understood the concept, at least like the video, at the same time forward it to your friends and just pass on one comment. Is it helpful or not helpful? And if you want some other things, just let me know through your comment. Right? Thank you.